Hi guys, I am CA Jalota and I only come on YouTube for two reasons, either RTPs or solving of the paper. Okay, so this is costing CA Inter paper of May 2026. My entire video for today will be going in the following steps. I will be discussing how the paper was in a very short period of time because I don't much believe in that. Second, I will reveal the final answers of each and every question that was there for the students who have given Jan attempts. For the students who have given the May attempt. So therefore, those guys can check up their answers very fast. Okay, and third, I will start to be solving all the questions, okay, one by one completely. In this PDF, which you all can get by writing to us on our Telegram ID @AJNext. This is our Telegram ID, AJNext, So you all can write to us over here with your name, telephone number and attempt of your CA Inter and we will give you the link for this. This has everything that you all need, everything that is there. Okay. One small thing. All our lectures of the previous batch are there on the YouTube channel. So therefore you all can access everything without paying a single rupee. And not only lectures, tests are also there. Apart from that soft copy of the book, everything. Either you can watch the lectures on a YouTube channel. A better way out, visit my website www.ajnext.com and you'll find a course which is fully free, which you all can access. Okay, so website is also called as www.ajnext. In case you want to be purchasing the latest batches, then also you'll be getting them over there only. And nothing to inquire. We don't have much staff also to take the inquiry. Okay, in case you wish to be purchasing, visit the website, enroll, your lectures will start. You can watch them on the app, Android, iOS or browser, wherever you all want. Okay, so let's start away with the first part. How was the paper of CA Inter costing May 2026? Chale guys, so let's start to be discussing how the paper was and I'll give you the final thing at that particular time. Okay, the final answers I'm giving you right now. This will be useful for the people who have given the examination. Just check your final answers, nothing else. Okay, and I'll keep on saying how tough was the thing. Now, if I have to ever try to rate this paper, say from 1 to 10, okay, 1 being the toughest, I'll try to be saying that maximum this entire paper was tough to the extent of 7 on 10 maximum. Okay, it was relatively an easier paper. You should have got good marks in this entire paper. Okay, just an advertisement, all our lectures are free on YouTube. Okay, so let's continue. Now see, now in my PDF you will be getting this data also, that every question, this is part 1, the same thing for part 2 also, every question that came in exam, in which chapter, from which chapter it is and where is a similar question, our book. Example, question number 1 to 5, those are the MCQs, were similar to question number 21 in chapter 4 of overhead. So therefore this will also try to convince you to a great deal that whatever we all do, that is head and tail of everything. And one small thing, these are the references of my latest book. The one recording that I have given on YouTube for free, okay, that is of my previous batch. Please do note that much because you might like to be comparing one by one, hence I'm telling you. In fact, even these questions will be there, but like, you know, the references might be a bit different. Okay, now, question number 1 was on overheads. You all have done a similar question. If you had done a question like this in your class, only then I think this question was manageable. Else this question was not a manageable question. You have to find out CMHR. So the answers over here, part 1 was 34 per hour, part 2 in this case was this one, part 3 was 51,000, part 4 was 2,04,000 and part 5 was 102 per hour. Okay, then question number 2 was on service costing, a very easy question, very easy. You just had to be finding out cost per passenger kilometer. Cost was there, you just had to find out number of passenger kilometer. Answer was 4.97, free 2 marks. CVP analysis, a very simple question, 2 years sales, 2 years profit. You have to find out break even sales. We all have done so many questions like this. Again, gift of the institute for 2 marks. Your final answer should have been 100 lakhs over here. Then material costing, you just had to apply the formula of maximum stock level and get ROQ as a balancing figure. Okay, again, gift of 2 marks to the institute to you all. It was 500 units. Further, this was a question on labor hour rate. We have done around 4 questions like this. Okay, might be the easiest one of them is this question only. Okay, your final answer was labor hour rate is 160 rupees per hour. Job costing, a question whereby all the costs are given, you add all of them to arrive at the selling price. Okay, and this was supposed to be your selling price. Again, 2 marks. Question number 1 to 5, I am not sure how many people got it correct. If you have studied from us, you would have got it correct. If you have not, then it depends upon whether you had solved that question or not. A similar kind of that question, I guess, was there in RTPs also. Okay, in any case, last 5 questions of 2 marks each were very simple. The next question was time consuming. This was all about your process costing. This was a difficult one, although should not have been a difficult one for us, because we have done 2 questions like this of inter-process profits. Okay, in fact, this question that is there almost similar to the question that we all had done in class together. Over here, you had to be making process 1 account, process 2 account. This is process 1, this is process 2, and a finished goods account. And accordingly, these are supposed to be your answers. 60 lakhs, 25 lakh, 32, 500, 7.5 lakhs, 55 lakhs and 90,000. But to get these answers, you have to be making lot of accounts like this. That could have been time consuming. So this many people could have left because it was a long question, but otherwise not a difficult one. So honestly, part 1 of your entire paper was of 30 marks. At least I can be saying with the confidence, I cannot say about all the students. Our students should have got 30 upon 30, at least in the MCQs. Okay, so one way you are almost secured that you have got good marks till now. Further, part 2 in this case, first question was on cost sheet. All the elements of cost are given. You add it to arrive at your final answer of your cost and selling price. Okay. Question was easy. The final answer over here, this is the total cost and this is supposed to be your selling price. Okay, 5 marks question, again a gift. Please do remember question number 1 is compulsory in the practical papers. Question number 1B was on standard costing, again 5 marks, material and labor both. There will be 1 question on standard costing again for fixed overheads. Okay, but this question, some data was there, some you have to find out. Actual rate of material was 42.5. Material usage variance was 1,20,000. Cost variance was 2,95,000 adverse. Labor rate variance was 24,000 adverse. Labor efficiency variance was 50,000 adverse. And then there was a question on reconciliation whereby you had the loss as per cost account. You have to find out the profit as per financial accounts. We have done around 3 questions like this. This was quite simple one. Your RECO will show financial accounts as a balancing figure and the financial loss will be coming to 4,60,000. This will be the loss as per the financial accounts. Now, just one thing, by default, do not expect marks if you have not got the final answer. In case you get it, then it is altogether okay. That is a bonus for you all. Okay. Then, question number 2A was on cost sheet. Over here, you have to be making the cost sheet and there was this item over here, sale of scrap. Now, sale of scrap, I have told in class, ICAI does not treat it correctly in cost sheet. And that is why I have given 2 answers over here. Either your 5 answers that those guys have asked will be this, and this. Okay, out of all of them, works cost can be different if you follow different treatment of sale of scrap. Okay, prime cost is same under both my options. COP is same, COS is same, sales is same. Only thing is works cost can be different. I'll discuss about all these things whenever I will be coming to solving the final answer. Okay, but these could have been one of the 2. I think ICAI will be going for this one, although that contradicts with your module, but I think so ICAI will be going for this one. And this thing actually makes more sense, although it contradicts with the module. Okay. Then you have question number 2B of CVP analysis. Okay, this was a good question. I like this question. It shows how commonly you all can think of the difficult situations. Over here, in case of part 1, break-even point in units was this, sales was this, cash break-even point was this, and cash break-even sales was this. In part 2, your final answers in this case, 95% capacity utilization and 18,75,000 will be your margin of safety CA. This was a tough question. Okay, I'll not say too tough, but if you know, because one of my favorite chapters is marginal costing. I love that chapter number 14, and this question wasn't that only. Then joint products and byproducts, okay question. If you convert that into a diagram, it becomes very simple. Over here, the apportionment of joint cost, this will be your answer. Joint cost was this was a breakup of this. And extra profit, if you convert A product into A prime product, it'll be 4,40,000. So therefore these were the two answers over there. Okay, further. Standard costing. This was the question on standard costing but fixed overheads part. This data is given, you convert that into a standardized format. Once you all do that, then in that case you can find out your variances. Your 4 answers was expenditure variance was this, volume variance was this, calendar variance was this, and total fixed overheads cost variance was this particular figure, 6,000 favorable. Budgetary control. I'm tired of speaking the same sentence. Same question is there in our budgetary control chapter. Data of 1 year is there. The budget and the actual data of 1 year is there. Some changes are given for the next year. You can try to be doing it. Based upon the changes, this is your budgeted sales for the next year. And this is your actual sales. Sorry, this is your budgeted sales and actual sales of the current year. Okay. Then this was a question on 3 types of methods of labor turnover: flux method, replacement method, and separation method. Exact same question is there in our books. Accordingly, these 3 are the answers: 900 workers, 36 workers, and 72 workers. Okay, you should have got these as your answer. Further, activity based costing. In this you could have got confused to some extent. I will discuss that once I completely solve this, but then your answers will be like this. Under absorption costing, these are your sales and profits. Okay. And under activity based costing, sales of course is same only, the profits will be different because of different answers of overheads. This will be your answer for the profit part over here. Okay. Then question number 5B on CVP analysis was a simpler one. It was a 4 marks question. Okay, this was your profit, this was your PV ratio, this was your break-even sales, and this was your fixed cost. Question number 6 was on theory. I would not like to discuss that particular thing. It is okay that you all can solve yourself. Okay. Now, this I had done basically for those people who have given May 2026 CA Inter costing attempt. Now, for those people who wish to be checking each and every answer and who wish to be solving this entire paper with me, first request me that paper on our Telegram ID that I told. Keep a copy with you and then start to solve with me. And I've given the timelines below. In case you want to check any specific question in detail, please click over there. Directly you will be going to that part of the video. Okay. So let's start off now by solving the complete paper. Okay. Let's start. So this first question is of overheads. I think towards the end of the chapter of overheads, we had exactly the same kind of a question. Let's do that. Safety First Tire Company is a manufacturer of puncture resistant motorcycle tires. Okay, in the manufacturing it undertakes 3 different jobs, namely belting, extrusion, and vulcanizing. They call them as B, E, and V. All the 3 jobs require the use of a special machine and also use of artificial intelligence system where necessary. The AI system is hired from outside. Okay, hiring charges paid for the quarter is 4,08,000. In that, this word is important for the quarter. Okay. An estimate of the overhead expenses related to the special machine is given below. See, this was the expense of the AI system, whereas this is the expense of a special machine. Okay. Please do remember, all the jobs require special machine for sure, but they might require the AI system if required. But machine everybody requires. The cost of the machine is 66 lakhs. Depreciation is charged at 10% on SLM basis. Okay. 10% per annum. Rent for every 6 months is this figure. Other indirect expenses per annum is this particular figure. During the first month, now most of the errors that would have happened because of all these things. During the first month of operation, the following are the details available from the job book of the company. So we took over 3 jobs: belting, extrusion, and vulcanizing. These are the 3 things that those guys had mentioned over here. So how many hours, number of hours the special machine was used without the AI system? Okay, 600 plus 900, so in all 1500. With the use of the AI system, 450 plus 550, 1000 plus 1000, so 2000 hours. Okay. Coincidentally, even the total number of hours in the question that we all have in our books was 3500 only. Any fraction in calculations may be rounded off up to 2 decimals. Now, one thing, How ICA solves this question is very different. How we solve it in a very easy way. ICA does that in a complicated way. Our answers will be matching, but my way I always try to be thinking will be far more simpler. Okay. Now, in case you have your own way, please do like that, match the answers in it. Now, further, on the basis of the above case scenario, you are required to answer the following MCQs. What is the machine hour rate for the company as a whole when the AI system was not used? See, do remember, when AI system was not used, that means only machine was used. Okay. 4 options are there. What is the machine hour rate in respect of the individual jobs, belting, extrusion and vulcanizing? Okay. Then, what is the amount of overheads per month for the special machine without the aid of AI system? Okay. So what is the amount of overheads per month for using the special machine without the aid of AI system? Fine. What is the amount of overheads per month for using the special machine with the use of the AI system? Okay. So here you have to find out the amount of overheads. In the first 2 cases, you have to be finding out the hour rate. Okay. Further, what is the machine hour rate for the company as a whole when the AI system was used? Okay. Now, in this case, again I am saying I am solving the question. How I try to be thinking is most obvious. See, this is a question all about CMHR, comprehensive machine hour rate. There are 2 types of machines. One of them is a special machine, other of them is a computer. 2 machines, find out 2 rates, and then we'll answer all these particular questions. Okay. So let's try to talk of the AI system. For AI system, try to be thinking like this, that this data is for a month. So let's do all the things for a month. Okay. So for the AI system, there is only one cost that is given to you for 1 quarter. 4,08,000. Let's convert it to a month divided by 3. Okay. So 4,08,000 divided by 3, whatever the answer comes. Now that is the cost for the AI system. And how many hours the AI system is being used? This plus this plus this, that is nothing but 2,000. So therefore, just divide, no, your comprehensive machine hour rate is nothing but the total expenses to be charged to the machine, divide by the number of hours that the machine was getting used. That is whatever I have done over here. See, absorption rate or CMHR, comprehensive machine hour rate, means the same thing for us. 4,08,000 divided by 3 divided by 2,000 hours. So therefore, that will be coming to 68 per hour. So whenever the AI system is getting used, the rate is 68 per hour. And for the machine, try to be thinking what all expenses are there. There are 3 expenses. 66 lakhs is the cost of the machine. Depreciation is 10% per annum. So therefore 6 lakh 60. But that is 6 lakh 60 for a year. Please divide by 12. Rent 1 lakh 38,000 for 6 months. Divide by 6. 4 lakh 92 is per annum. Divide by 12. Okay. So therefore these are the overheads for this entire special machine. That is whatever I have done over here. See, this plus this divided by, in this case, total number of hours that the special machine was used. Please do remember, special machine was used over here also, over here also. Machine is always used. Whether AI system is used or not, that's a different thing. Machine is always used. So machine was over here also, machine was over here also. Those guys have given no this heading. That is, special machine was used. That's it. So therefore, we total up the expenses. Okay. Then we divided by the total number of hours. So therefore, rate per hour of the machine is 34 per hour. Okay. So therefore, please do remember that the rate of the AI system is 68. But the rate of the special machine is rupees 34. Now, either machine will be used alone or it will be used with the AI system. So whenever only machine is used, at that time rate will be 34, this particular thing. But then whenever machine will be used with AI system, you will be adding this rate and this particular rate. So 68 plus 34. So therefore this particular figure will be 102. Okay. So please do remember, whenever only machine is used, the rate is 34. Whenever machine and AI is used, okay, at that time rate is 102. Now these 2 rates I'm going to be writing over here. Please do remember, presentation does not matter for the case study question. So therefore, I'm going to be writing in red color. Okay. Number of hours the special machine was used without the AI system. That time I'll only be charging 34. Okay. And whenever it is used with the computer, I'll be charging the rate of the machine whenever it is used with the AI system, I will be charging the rate of the machine as well as the AI system. Okay, so therefore rate will become 102. That is 68 plus 34. Okay, fine. Now the question was what? The first one. What is the machine hour rate for the company as a whole when AI system was not used? Can we say when AI system was not used, only machine was used? Correct, no? Common sense. So only machine was used, rate was 34. That is whatever we all got right now. Okay, second. What is the machine hour rate for the month in respect of individual jobs, belting, extrusion and balkanizing? 4 options are over here. So try to think, this is a simple thing. Okay, this is a job. For this job, 600 hours are needed without the use of the AI system. Without the use, that means only machine is there. So this figure plus, into this particular figure, 600 hours at the rate of 34. And 450 hours machine was also used, AI system was also used, that time you charge 102. So therefore, this into this plus this into this, these are the total overheads to be charged to the belting job. And that much overheads you are going to be charging for 1050 hours. How did 1050 come? 600 plus 450. That's it. You all can see that is whatever I have done. See, CMHR for the jobs, the first one, 600 into 34 plus 450 into 102. That's what I told you. Divide by the total number of hours, that is 1050. So therefore, it will be coming to 63.14. For the second one, it will be 900 into 34 plus 550 into 102 divided by this plus this, that will be 1450. Okay. For the last one, honestly, it is not needed. Okay, somebody can still be doing the same thing, although it is very simple. For vulcanizing, in any case, these hours are 0, no? So therefore, this will only become your answer. 102. In case you wish to be computing, you can this into this divided by 1000. In any case, answer will be 102 only. Okay. So therefore, your final 3 answers are 63.14, 59.79 and 102. So 63.14, 63.14. I guess that is only there in A over here. Fine. What is the amount of overheads per month for using the special machine without the aid of AI? Okay, without the aid of AI, what is the total amount of overheads per month? Too simple, yeah. Now, number of hours that the machine was used without the AI system was 1500. Okay. Now, see what those guys have asked you. What is the amount of overheads per month for using the special machine without the aid of AI? Okay, so without the aid, those were 1500 hours, no? Into 34, that is whatever should be the answer. So, overheads for using the special machine, 34 into 1500, so 51,000. 51,000 should be your answer over here. 51,000. Further, what is the amount of overheads per month for using the special machine with the use of AI system? Okay, so therefore that will be nothing but 2000 hours into 102, because these are the number of hours that the machine is used with the AI system. So 2000 into 102, that should be your answer. 2000 hours into 102, 204,000. 204,000 should be your answer. Lastly, last part is what, beta? Over here. What is the machine hour rate for the company as a whole for a month when the AI system was used? Now, whenever the AI system was used, it was used with the machine. Okay. So therefore, at that particular time, rate will be 102. That is whatever we all got also. So therefore, over here, answer in this case should be 102 over here. Okay, this answer. That's it. So therefore, these are your 5 answers. This case study was easy one. Same question as we all have done in class. Okay, absolutely no change. You should have got 10 marks. You all can tell me in the comments you got 10 marks for this question or not. Okay, and you had seen that question on the YouTube channel or not. It was in chapter number 4. Okay, chalo. This question is done. Chali. Our next MCQ, this was on service sector. Okay, might be one of the easiest question they could have asked you over here. Okay, simple question on a transport company, nothing else. You have the funda of transport company which carries the passengers. What is your default unit? Passenger kilometers, right? So let's start to be doing it. AMC Travels is running 4 luxury buses, okay, between 2 cities which are 60 kilometers apart. So they're from A to B is 60 kilometers, okay. Further, the seating capacity of each bus is 50 passengers, okay. The actual passengers carried were 70% of the seating capacity. Obviously 70% was the capacity going and coming because nothing else is stored. All the 4 buses run for 30 days for a month. Each bus makes 1 round trip per day, okay. So therefore they go and they come, so 1 round trip, okay. During the month of April 2026, AMC incurred a total cost of 25,05,000. Okay, what is the cost per passenger kilometer for the month? See, if you want cost per passenger kilometer, find out total cost. Usually for that we make an operating cost statement. In this question it is given to you. Divide by the number of passenger kilometers. So try to find out number of passenger kilometers. Now one thing that I have done for time pass, in case you have done directly, it is altogether fine only. You are just looking for answers. Okay. You can find out the total number of kilometers. How do you find out total number of kilometers? 60 kilometers going, 60 kilometers coming. So 120 kilometers. Okay. 120 kilometers per day into 1 trip per day. So therefore that I have not written into 1. In any case answer will be same. Okay, that thing will happen for 30 days in a month. This will give you the data for 1 bus. Like this, there are 4 buses. So therefore 4 buses run for 14,400 kilometers. Okay, but these are the number of kilometers. I want number of passenger kilometers. And in each kilometer, those guys have 50 into 70%. Okay. So therefore, in this case, 14,400 into 50 into 70%. That's how you compute no number of passenger kilometers. What is 1 passenger kilometer? 1 passenger traveling for 1 kilometer. So therefore, over here, 50 into 70%. 35 passengers traveling for 14,400 kilometers. That will give you 5,04,000 passenger kilometers. So therefore, cost per passenger kilometer will be your total cost divided by the number of passenger kilometers. Answer should be 4.97 passenger kilometers. So therefore, this will be your answer as such. Okay, easy question. You all can tell me that you got it correct. Please do not write down that you did not get this answer correct. There was no even like a silly error chance also in this question. You should have got it correct. Yeah. Chali, altogether done. Sorry, question number 7. Now this is one question everybody has seen. Whether you have already done your BCom, this is a favorite question. For CA Inter, we all have done so many questions like this. Let's do it. The following information has been extracted from the records of XYZ for 2 consecutive years. Sales 180 lakhs, 240 lakhs. So therefore sales increased by 60 lakhs. No. Profit 24 lakhs and 42 lakhs. So therefore profit increased by 18 lakhs. What is break-even sales value? Okay, so what is break-even sales? It is nothing but fixed cost divided by PV ratio. So start to be getting your fixed cost as well as your PV ratio. How do you get your PV ratio? PV ratio is contribution upon sales into 100. That's how we compute our PV ratio. But think like this. In any case, you all know the logics, but just I'm trying to tell you. Profit increased by 18 lakhs, but fixed cost by default would have remained same. So therefore, this is not only increase in profit, is also increase in contribution. And this increase in contribution was brought about because of increase in sales of 60 lakhs. We usually say PV ratio is contribution upon sales into 100. Now we'll say it is change in contribution upon change in sales into 100. Okay. Some people, by the way, don't know this logic. They try to be thinking it is profit upon sales. How can PV ratio be profit upon sales into 100? But this change in profit actually represents change in contribution also, because fixed cost change is supposed to be 0. So therefore, this upon this into 100 will give you 30%. Okay, so PV ratio is 30%. Now start to be getting your fixed cost. Fixed cost, it is simple beta. Substitute in any year data. Example, you can substitute in this year data. This year sales was 180 lakhs into 30%. So therefore, 54 lakhs you must have got as your contribution. So profit was 24 lakhs. So therefore, in middle 30 lakhs must be your fixed cost. Okay, fixed cost is contribution minus profit, no? So 54 lakhs minus 24 lakhs will give you 30 lakhs. Finally, break-even sales is fixed cost divided by PV ratio. Fixed cost is 30 lakhs divided by your PV ratio, that's 30%. So therefore, this figure should be 100 lakhs. So therefore answer should be 100 lakhs over here. That should be your answer. Okay, that's it. You must have got it correct. Please don't comment all these things. You must have got it correct only. Chali, all done. Chali, question number 8 on material costing. Just a balancing figure. You should be just knowing the formula of maximum stock level, nothing else. Management of Gamma Limited has provided the following information for product X. You will have maximum stock level 1125 units, reorder level 750 units, minimum rate of consumption per day 25 units, minimum lead time is 5 days. What is the reorder quantity? Okay, you have 4 options over there. Try to select. See, now you have to find out reorder quantity. ROQ in any case comes in the formula of maximum stock level. What is the formula of maximum stock level? Maximum stock level is nothing but you order at reorder level. If you want the highest stock, consume minimum and try to think supplier will come in the minimum lead time. And on that day, he will get the new stock also. That is nothing but the quantity that you order. So therefore, this is the formula. Every data is there with you. 1125 is over here. Okay. ROL 750 is over here. Minimum consumption and minimum lead time are given to you. ROQ will be the balancing figure. So therefore 1125 is equal to 625 plus ROQ. So ROQ will be nothing but 500 units. So therefore your answer will be this over here. These all free marks given to you all. You have to be encashing the free marks. Okay. MCQs give you a great way to be crossing that minimum percentage. If you get 30 upon 30, there are only 10 to 20 marks left for you to be passing. I'm not saying please aim at 40 or 50, no. But I'm saying at least first cross that threshold. Then in any case, like mind-wise also, you all are tension-free in exam. Okay, chali. So therefore answer should be 500 units for this question. All done. Chale guys, employee costing chapter number 3. Almost the same category of question. You have to find out labor hour rate. Labor hour rate is nothing but C to C divided by the number of hours the worker is expected to work, excluding normal idle time. Okay, so let's start it off. The following particulars are pertaining to worker G. Basic pay 25,000 per month. Okay. Then the next one, dearness allowance 5,000 per month, other allowances 2,000 per month. We can multiply all of them by 12 to convert them into a year because this data is given to you for 1 year. The number of working days in a year is 325 of 8 hours each. G has availed 25 days of holiday on a full pay in a year. So therefore, try to be thinking that Mr. G will be working for 325 minus 25 days. He'll be only coming to the factory for 300 days in a year and he'll be working for 8 hours each. Okay. So 300 into 8 is 2,400. In this question, there is no normal idle time only. If there was normal idle time, we would have subtracted that. Okay. In any case, there is none. What is the wage rate per hour of worker number G? So all these things you can multiply by 12. Okay. This will give you your cost to the company. Once you get that figure I have done over here, 3,84,000. Okay, divided by 2,400 hours that I spoke of, this will give you your labor hour rate, 160 rupees per hour. So therefore, that should be your answer over here. So therefore, answer is B, 160 per hour. Again, exact replica of the question that we all have done in class. It will be there on YouTube also. In case you all want, you all can watch it. In any case, if you have the latest batch of costing, okay, there too our content is that notch that ICAI cannot cross it also. Okay, chali. So this thing is altogether done. You know how to be making a simple cost sheet, no? Where everything is given to you. So a question exactly like that. Just everything is given, add up all the things, find out the selling price. The following information pertains to job number 501 undertaken by PCM Limited. Direct material 60, direct wages 50,000. Okay. So factory overheads is 60% of direct wages. Direct wages is 50,000, no? So therefore this will become 30,000. So 60,000, 50,000, 30,000, 60 plus 50, 110, 140,000. Okay, this will give you factory cost. And admin overheads 25% of that. So 25% of this will work out to 35,000. So therefore 1,75,000. Okay, further profit as a percentage of total cost, that is 25%. Okay, So therefore it is percentage of total cost. Now this is your total cost at 25%. So I guess that'll be 43,750. You add it up, this will give you the selling price. That's what those guys have asked you. What is the selling price of this particular job? That is 501. I guess I have solved the question also here. So this plus this, I guess I have done same calculations over here also. So direct material, direct labor, factory overheads, that will give you factory cost. Add admin, that will give you your total cost. Add profit, that will give you your selling price. So therefore answer is 218750. So this should be your answer as such. Okay, that's it about this question. Just you have to add up all the things. It's a simple question. You can call this question on job costing, cost sheet, okay, whatever you all want, but then too simple a question as such. Okay, chill, all done. Sorry, now one question that was a big one. Okay, process costing. We have done inter-process profits. If you all remember, one department transfers the goods to the next department, not at cost, but at cost plus markup. That is called as transfer price. We all have done this thing. Like, why does transfer pricing come? I told you all, this will also be coming in CA final. That is the transfer pricing concept. So this was a question on that. Exact replica of the question we all have done in class. Okay, so almost the same thing. This question would have taken time for you all to be solving, but then for 10 marks, I guess it is worth it. Okay, so let's do it. Graphite Core Industries, established in 1995, is a globally recognized for producing reliable, high-quality wooden pencils. It begins its production process by sourcing raw material, graphite, clay, and cedar wood slates, holding them as raw material. The following are the details about manufacturing process of a company. Core manufacturing process. In this process, the graphite and clay are mixed. Okay, this is the first process. Okay, please do remember. Here, graphite and clay are mixed, extruded into rods and fired. Please do remember, they all make wooden pencils. Okay, in the first process, this and this are mixed. They are extruded into rods and fired to create hardened pencil cores known as lead. Okay. Simultaneously, cedar wood is also cut into groove slats. The output of this process is lead and groove slat transferred to casing and shaping process at 30% profit on transfer price. 30% profit on transfer price, like 30% on sales. Okay, further. Casing and shaping process. So this was the first process. Now this is the second process. That is whatever those guys had told, that from here the goods will be transferred to this process. In this process, leads are glued between the groove slats, shaped into individual pencils and painted. The output of this, that is pencils. So output of second process is final your pencil transfer to finished stock at 10% profit on transfer price. So it is 10% profit on transfer price, 1/10 of transfer price. 1/10 of transfer price is also 1/9 of cost. Just do remember this. Stocks in process are valued at prime cost. This is the same adjustment that we also had. Stocks in process are valued at prime cost. Okay. Further. The production manager has provided the following information for the month of April 2026. Particulars, core manufacturing process, this is process 1 for you. Casing and shaping, this is second process for you. Direct material, direct wages, direct expenses and factory overheads. Okay, these are the things. But do remember that stocks in process are valued at prime cost. Further. Opening and closing stock of 3 things are given to you. Process 1, process 2 and this is finished stock. Okay, further. Finished stock is valued at the price at which it is received from casing and shaping process. Casing and shaping process is process 2. Now this line, ICAI, I know one thing. Those guys interpret this line to mean that you are going to be following FIFO method. Okay, although just for the education of the institute, this line does not mean that you have to follow the FIFO method. Although I know that ICAI because I saw their answer first. This line, those guys have told that we assume that we follow the FIFO method. Okay, further. During the month of April 2026, the company sold pencils worth 75 lakhs. Inter-process profits included in opening stock for casing and shaping process. Okay. And finished goods are 75,000, 3,20,000. Now you all will understand. opening stock over here. This will include the inter-process profit that department 1 must have made whenever it transferred to department 2. This includes inter-process profit of 75,000 and finished stock includes a profit of 3,20,000. On the above case scenario, for the month of April 2026, you are required to answer the following MCQs 11 to 15. Okay. What is the transfer price of pencils including inter-process profits? Transfer to finished stock from casing and shaping process. What is the transfer price of pencils? Transfer to finished goods stock from casing and shaping process. This is your process 2, no? So what is the transfer price? What is the amount of profit realized by Graphic Core Industries on sale of finished stock of pencil, which is transferred to costing P&L account? So therefore, this will be your final realized profit. Okay, what is the final realized profit? That you can either get by making costing P&L account, but a presentation doesn't matter. Let's not waste our time. You can get it from your finished goods account also. What is the profit of core manufacturing process? Okay, this is your process 1, no? So this is the process 1 profit. Okay. What is the prime cost included? What is the prime cost including the inter-process profits of casing and shaping process? This is your process 2. Okay. What is the amount of profit included in the closing stock of casing and shaping process? Okay. Let's start it off. Listen. Now, over here, I'm going to be making 3 accounts for you, and from there we'll be able to get all the answers. First, we are going to be making core manufacturing process. I've reduced the font a bit, so therefore I can do all the things in one single page only. Okay. This is your first process. This is your second process, and lastly, in this case, is your finished goods account. Okay. So, what I have done. This is the exact same format that we had when we solved a question like this. We all have solved 2 questions like this in our class. One with having 2 departments and finished goods account. And then you solved a tougher one whereby we had 3 departments. Okay, you did a tougher one, I did a easier one in fact. Okay. So first of all, opening stock. Opening stock of process 1 is given to you over here. This is your process 1 opening stock. Obviously, this will not be having anything like inter-departmental profits. Okay, then add up your direct material, direct labor and direct expenses. Do not add up your factory overheads till now because of this line. Stocks in process are valued at prime cost. So first of all, value your closing stock and then add your factory overheads. So therefore, factory overheads will not enter your stock valuation. Okay, so that is whatever I have done over here. See over here. Opening stock, direct material, direct labor, direct expenses. We have 3 columns over here. Cost to the company, profit of any department and total. The figures that are given to you are of course this particular figures. Okay, 5,10,000, 4,90,000, 3,60,000, 3,40,000. Of course, they do not have any concept of profit over here in middle because this is the first department. Okay, this will give you your total less your closing stock. Your closing stock is over here 2,50,000. Okay, of course will not have inter-process profits again because this is the first process. You subtract that, this will give you prime cost of goods transferred. Okay, add up your factory overheads now. That is 3 lakh rupees. So where is factory overheads? Factory overheads is given to you over here 3 lakh rupees. Okay, once you all do that, this will give you factory cost of goods transferred. Okay, and then whenever you transfer the goods, you don't transfer at cost, you transfer at cost plus markup. What is your markup? 30% on transfer price. So therefore, I can write it somewhere if you want. I'll erase it also. Cost plus profit will give you transfer price. It is 30% of transfer price. So therefore, this figure will become 70. So it is 30% of this or 3/7 of this. That is whatever I have written over here. So therefore, 3/7 of this figure will be coming as 7,50,000. So therefore, 25 lakhs. Okay. Please do remember 25 lakhs includes 7.5 lakh rupees of the process 1 profit. So 17.5 lakhs will be the cost to the company as such. Okay, this is process 1. I will say all the answers of the MCQs once I am done with the explanation. Okay. Further, second process. Now second process will be starting with opening stock. Opening stock is over here. That is 7,75,000, but that includes 75,000 of inter-process profits. So see over here, 7,75,000, that includes 75,000 of inter-process profit. This will give you opening stock of 7 lakh rupees. This is cost to the company. Then this data will come over here. No, output of process 1 is direct material cost for process 2. Okay, that thing will come. Then this department will also incur expenses. No, so those expenses are over here. Okay, these 3 expenses: direct material, direct labor, and direct expenses. These expenses I will be writing first over here, and then factory overheads will be written after some time. So therefore 8,95,000, 9,50,000 and 3,80,000. See over here, 8,95,000, 9,50,000 and 3,80,000. So therefore this will give you the total. But do remember that you will have closing stock of 6 lakh rupees. This is your closing stock. Will it include inter-process profits? Of course it will include. So therefore 55 lakhs includes 8,25,000 of inter-process profit. 6 lakh rupees is a closing stock out of that. Okay, how much inter-process profit will it have? So therefore cross multiply. So this figure is nothing but I have done the calculations over here. This into this divided by this, that will give you this. Balancing figure 6 lakhs minus 90,000 will be giving you 5,10,000 over here. This will give you prime cost of goods transferred. Add factory overheads. This will give you factory cost of goods transferred. Okay, 2, and then whenever department 1 will transfer to, whenever department 2 will transfer to finished goods, it charges a profit of 10% on transfer price. 10% of transfer price is 1/10 of transfer price, that is 1/9 of cost. So I took this is the cost of department 2, 1/9 of this will be giving you all 6 lakhs. You added, that will be giving you 60 lakhs. Please do remember 60 lakhs includes 13,35,000 of inter-process profits. Okay, this is cost to the company over here. Okay, so this is your process 2, that is casing and shaping process. The last one over here, then I'll try to give out the answers for the MCQs. Finished goods account. Finished goods account, opening stock was there as 14 lakh rupees. That figure was given to you over here. 14 lakhs. 14 lakhs. See over here, 14 lakhs. But that includes 3,20,000 rupees of your opening stock reserve. 3,20,000. This is your balancing figure. Just a sec. Something got moved. So 3,20,000. This will be 10,80,000. Then this figure starts to come over here. This is your total things. Now that line ICAI interpreted as FIFO method. Okay, see what line those guys have given to you. Finished stock is valued at a price at which it is received from casing process. Okay, this line already tells you how finished good stock is valued. Please do remember, this department will always value the stock at their cost. Their cost is always the selling price of the previous department. That line does not tell you that it is FIFO method. But I have observed that even in the modules, they interpret this line as FIFO method. See, you all should understand, even this opening stock is received from the previous process. It is common sense. So therefore, this line does not tell you that actually they all follow FIFO method, but I knew ICAI's mentality and I cross-checked this particular thing. So those guys in this case have valued the closing stock based upon the FIFO method. So therefore, instead of using this, okay, that I have done in our class, okay, because I use the weighted average method, okay, those guys have assumed that that line actually means that we are going to be following the FIFO method, okay. So therefore, closing stock will be out of this. So this calculation I've shown over here, okay, how 60 lakhs includes this much amount of inter-process profits. Out of that, 10 lakhs is a closing stock because we all follow the FIFO method. That is whatever ICAI has interpreted. Sir, but you did not do like this. I followed the weighted average method. Okay. Now, so therefore, this particular figure will be this into this divided by this. That's how you get 222,500. That calculation I've shown over here. Once you all do that, okay, you arrive at your cost of goods sold. There is no admin or S&D. You adjust your sales over here. Okay. 75 lakhs is the sales that is given to you in the paper also. Okay, so 11 lakh rupees will be your profit that you shift over here. So apart from this much amount of profit, you made this much amount of profit when you sold the goods. So therefore, this is your final profit that the company has earned over here. Okay, that's it. So this is your answer. Now let's try to look at all the questions that were there for MCQs. So what is the transfer price of pencils transferred to finished goods from casing and shaping process? Okay, from casing and shaping process, this was your transfer price, I guess. Okay, this is your final price now. So answer should be 60 lakhs. Is there 60 lakhs? Yes, there is. First one. Second, what is the total amount of profit realized by the company on sale of finished goods? That I just now got towards the end for you. That is this answer. To 25, 32, 500. 25, 32, 500. This will be your realized profit. In case you follow weighted average method, this is the only answer you might have got confused. Okay. But then you realize because the answer that you will be getting by following the weighted average method will not match with these answers. Suggestion to the institute, please write clearly it is FIFO method. That line does not convey that it is FIFO method. Acha. What is the profit of core manufacturing process? Core manufacturing process made this much amount of profit. Okay, that is 7.5 lakhs. This particular figure. So 7.5 lakhs. This figure. Further, what is the prime cost including inter-process profits of casing and shaping process? Okay, so prime cost of casing and shaping process. Okay, this is the prime cost, no? Till now we have only written the expenses for this period. I think so this should be your answer. 55 lakh rupees. 55 lakh rupees. 55 lakh rupees. Do not deduct the closing stock because closing stock will give you what is prime cost of goods transferred. They just want the prime cost. So therefore they want before you adjust the closing stock. And lastly, what is the amount of profit included in closing stock of casing and shaping process? That is the second one, no? This is the amount of profit that is included in the closing stock of casing and shaping process. So 90,000. So these should be your 5 answers. Okay. Now, I'm not sure how many people got this, but I think you should have got most of them here. Okay. We all have done exactly the same kind of question. Please comment if you got this thing correct. Okay. That's it. This thing is all together done. This question is done. So 30 marks paper is all over. Chale guys, we'll start away with part 2, question number 1A. This was on cost sheet. Simple question. Everything is there in the question. You just have to try to make a cost sheet, consolidate the cost data, try to arrive at the answer. This was almost kind of the third question that we all have done in your cost sheet. Okay, so far too easy. This is whatever we did when we started away with the subject. XYZ Limited specializes in manufacture of high-end office furniture. They use a batch costing system to track production costs. Okay. The company received an order for a special production run, batch A01, consisting of 20 ergonomic executive chairs. Okay. The estimated cost for this specific batch are as follows. Direct materials, 55500. Direct labor. There are two types of direct labor. 300 hours at the rate of 50 per hour, so you can multiply. 200 hours at the rate of 40 per hour, so therefore you all can multiply. I guess this will be coming to 15,000 and this will be coming to 8, 1, 2, 3, 1, 2, 3. Okay, further. Factory overheads, cutting and shaping, 300 hours at the rate of 8 per hour, so therefore this will be 2,400. 200 hours at the rate of rupees 8 per hour, 1600. One thing I'm saying for your reference, nothing to do with the question, it will not give you anything extra, but company must be following labor hour method for factory overheads. That is why in this case there were two departments over here and these hours itself are getting copied over here. So therefore company must be following labor hour method for absorption of factory overheads, although that will not impact your answer. Admin and selling overheads, 20% of works cost. Profit 25% on selling price. You are required to calculate first total cost of the batch and selling price per chair. So what I'll try to be doing, see, for total cost of the batch, we'll try to just consolidate this entire data, nothing else. Okay. So therefore, we'll start away with This is too easier stuff. Okay, listen. So direct material is your first thing. There are two direct labor that I have written over here. Total will be giving you all prime cost. Add factory overheads, this and this. Once you all do that, this will start to be giving you all works cost. Okay, then admin and selling overheads are 20% on works cost. Okay, so therefore 20% of 82,500 will amount to 16,500. That'll give you your total cost. Total cost, once you all get it, profit is 25% of selling price. Please do remember 25% of selling price is 1/4 of selling price. That is also equal to 1/3 of cost. Okay. But the moment you all do that, I guess your job is altogether over. You got your total cost, add up your profit. That's 1/3 of cost. That'll give you your target sales. This is the sales we want to be having from how many chairs? Beta, 20 chairs. So therefore, you all can divide it. You divide this figure by 20. Okay, you will arrive at 6,600. So total cost of the batch is 1,32,000 and selling price per chair is 6,600. Now, one small request: whenever you finish up the answers, if you have not done in past, try to be doing that thing in future. I have also not done it, but I should be doing it. I tell to everybody in class, if there are required parts like this, in and just make a list like this. Total cost of the batch is 1,32,000 and over here selling price per chair, it is 6,600. Make a list like this. That makes the role of the examiner very easy. Okay, that will, like, speed up his calculations. He will only try to see these answers. So even if your presentation is bit faulty, this will try to compensate for that. Okay, easy question, 5 marks question. Okay, you should have got these 5 marks. In any case, this is supposed to be a compulsory question, no? So you should have got this thing. Okay, chali, done. Chali, our question number 1B over here. Now this question was on standard costing. Slightly a question on missing figures, okay, but super easy one. It's only about material. It's only about labor. Please do remember, whether it's material or it is labor, both of them are dependent upon output. Output means quantity produced of finished goods. So therefore, you always make a standard for actual output. Okay, remember that thing. Listen. EXC Limited operates a standard costing system for controlling its material cost and has furnished the following information for the month of April 2026. Standard price of raw material 30 per kg. Standard quantity of material required per unit is 5 kgs. Okay. Do remember this and this data. So for 1 unit of the product, you require 5 kgs. That is one thing. Second, in this case is 1 kg of raw material should be purchased at 30 per kg. So therefore, if I ever try to be thinking, 1 unit of finished goods will require 5 kgs to be purchased at the rate of 30 per kg. So therefore, for 1 unit of your finished product, okay, material cost should be 150 rupees. Okay, that is 5 kgs at the rate of 30. I'm erasing it out because I've made this thing below also. Further, standard rate of the worker is rupees 50 per hour. This will be standard wage rate. Okay, further, standard labor requirement is 2.5 hours per unit. So therefore, for 1 unit of the product, you require 2.5 hours. Pay the worker at the rate of 50 per hour. Actual output was 2000 units. So therefore, revised standard should always be made for actual output. Actual output was 2000 units. Okay. Then what data is there with you? You all have material price variance, 1,75,000 it was. Actual quantity of raw materials purchased and consumed, 14,000. Actual wages paid for 6,000 hours, 3,24,000. Okay. Fine. You are required to calculate actual price of raw material. Second, material usage variance. Third, material cost variance. Fourth, labor rate variance. Fifth, labor efficiency variance. Indicate the nature of the variance, adverse or favorable. That in any case you all will do. Now see, you have been given standard for material and for labor. I've made one common format for both of them. Okay. You have been given standard for standard cost data for 1 unit of the product. For 1 unit, material required is 5 kgs to be purchased at the rate of 30 per kg. 1 unit of the product should be requiring 2.5 hours from the workers to be paid at the rate of 50 per hour. So therefore 125. Now, as I told, material and labor, both of them are dependent upon output. Output was 2000 units. So therefore revised standard will be made for 2000 units. Okay. So for 1 unit, 5 kgs, for 2000, 10,000 kgs at the rate of 3 lakh rupees. Same way for 1 unit, 2.5 hours, for 2000, it will be 5,000 hours at the rate of 50 per hour, 2.5 lakh rupees. Okay, now actual data, see over here. Actual raw material consumed is 14,000. You don't have this thing with you, but then alternately you have material price variance, so you'll be able to compute something as missing figure. Further, actual wages paid for 6,000 hours. 6,000 hours, we paid 3,24,000. This was the rate that was supposed to be a balancing figure. Okay. Now see, what you have to be computing, actual price of raw material. So therefore, you want this particular data. I'll erase out the mess that I have made. So therefore, you want to be calculating this information right now. Okay, this information. For that, try to be using material price variance. How do you compute material price variance? What should have been the rate? What was the rate into actual quantity of raw material? That is whatever I have done. Material price variance, standard rate minus actual rate into actual quantity of raw material. So 1,75,000 adverse is 30 minus this figure. I have called that figure as X into actual quantity of raw material 14,000. 14,000 shifts over here on this side. 12.5 is equal to 30 minus X. Please do remember variance was adverse. So therefore actual rate will be higher than the standard rate. By how much? 12.5. So therefore add 12.5 to 30 to arrive at the answer. So therefore ultimately actual price will be nothing but in this case 42.5. In case you want, you all can complete this particular thing. Second, material usage variance. Now you can compute in a normal way. Material usage variance will be, you should have consumed 10,000, you consume 14,000 into 30. So therefore that must be your answer over here. Okay, you all can check it. Sorry, 10,000 minus 14,000 into 30, so 1,20,000 adverse. Okay, simple stuff. Third, material cost variance. You can compute material cost variance as this data minus this data. You all can compute it like that. It's not a problem. Okay, for that, you can just multiply 14,000 to 42.5. That will give you this amount. In case you do not wish to be doing like this, material cost variance is broken up into two parts, price and usage. You have price also. You have usage also. You add it. Okay, that is whatever I think I have done. Yeah, material cost variance is price plus usage. This plus this, so 2,95,000 adverse. Okay, further. Then labor rate variance you want to be finding out. Labor rate variance will be, you should have paid 50, but then you all paid how much? 54 into, in this case, 6,000 hours. So therefore I guess answer will be 24,000 adverse. Lastly, labor efficiency variance you want to be finding out. How do you get your labor efficiency variance? How many hours workers should have taken? 5,000 hours. How many hours he took? 6,000. So therefore he took 1,000 hours more. He is inefficient. Variance will be adverse into standard rate of 50 rupees. So therefore in this case answer will be 50,000 adverse. That's it. Basic question I guess on standard costing. Okay, all done. Chale guys, question number 1C. Just before I start, do tell me in standard costing how many marks you're going to be getting. It will be of course 1 mark per variance. Let's start it off. Question number 1C. Simple question on RECO, whereby cost sheet is not given to you. Financial accounts is not given to you. Just directly transactions are given for you all to be doing the things. Let's start it off. A manufacturing concern reported a net loss. It is loss please. Okay, of 4,20,000 as per cost accounts. Okay. For the year ending 31st of March 2026. Upon scrutiny of both set of accounts, the following differences were identified. Serial number, particulars and amount. Profit on sale of investments. Financial accounts only. So therefore, this must be income only in financial. Factory overheads under absorbed in cost accounts. So therefore, this is under absorption. Discount allowed to the customers. Financial accounts only. So therefore, this is expense only in financial. Depreciation overcharge in cost account. So therefore, this is over absorption of depreciation in costing. Selling and distribution over absorbed in cost account. So again, this is over absorption. Bad debts written off. Financial accounts only. So therefore, this is again expense only in financial. Okay. Overvaluation of closing stock in costing. This is overvaluation of closing stock in costing. Okay. 40,000. You are required to prepare a RECO statement. Okay. Second, ascertain the net profit as per financial accounts. So financial accounts, profit is not given. You have to find out that. Okay. Now I have made an account. If you want, I can convert that into a statement also. Actually, I have done both the things only. Okay. But still. So you have to find out the profit as per financial account. So what I am saying, this 4,60,000 is your balancing figure. Don't see that. This will be your final answer that will be revealed towards the end. Although now you all know the answer, that's okay. In this case, anything, this is however I have taught my students, any profit you put on any side, suppose financial profit on this side, cost profit on this side. If costing profit is this side, on the other side you can write down all those reasons due to which costing profit is higher, which is same as financial profit is lower. Okay, on the other side financial profit is over here, so therefore on this particular side write down all those reasons due to which financial profit is higher, which is same as costing profit is lower. Okay, now once you all have done these basic things, we'll start away with the things. Costing profit was 4,20,000 loss. Okay, so therefore I have put this figure over here as a negative figure. Okay, further we'll keep on doing the things one by one. Profit on sale of investment, this was income only in financial. If you have some income in financial accounts, financial profit will be higher, no? Financial profit is higher, so therefore this side. So profit on sale of investments 55,000. Okay, immediately on the opposite side I'll put both these things also, expense only in financial, due to which financial profit will be lower, no? So therefore 30,000 and 1,10,000. Okay, so therefore these two things are also done. Then factory overheads under absorbed in costing. If in costing you will be writing lesser amount, absorbed amount, costing's profit will be higher, no? Costing's profit is higher, so therefore this particular side, debit side. Okay, under absorption of overheads in costing, factory overheads 70,000 rupees. Okay, same way any over absorption will be coming on the other side. There were two over absorption, one of them is depreciation, one of them is S&D. So therefore both of them are over absorptions, due to which costing profit will be lower, no? Costing profit will be lower. In any case it will come on the credit side only. Further, overvaluation of closing stock in costing. If stocks are overvalued in costing, closing stock is higher, profit is higher, no? So therefore costing's profit is higher, because in costing closing stock is higher, no? So therefore it will be coming on this particular side. So overvaluation of closing stock in costing of, it is not of finished goods, I guess it is simply just this particular thing, 40,000. Okay, that's it. Once you are done away with this, okay, you can try to be finding out this as a balancing figure. Okay, so therefore 4,20,000 is a negative figure, 60, 90, 65 and 55, these are positive. So therefore this will be the total. This you can put over here, get this figure as a balancing figure. If somebody says, no sir, I want to be making a statement only no matter whatever happens, okay, you can convert this always in a statement form. Okay, how will you do that? This, add this, subtract this, you will get this as a balancing figure. That is whatever I have done here. If somebody wants to be seeing a statement, I have made that statement over here. You start away with costing loss, add those three things, deduct those four things, you'll start to be arriving at the answer over here. Okay, so therefore financial loss is 4,60,000. Okay, that's it about this question. You should have got it correct. I think this was quite an easy one. Okay, do tell me out of 5 marks how many marks you are going to be getting. Now in this, please don't try to ask me if I got one thing wrong, then you should be getting 0. In case you get the bonus marks, then it is like, you know, your bonus as such. Okay, chill, all done. Chale guys, question number 2A, this is all about cost sheet. Now, simple question, but there is one problem that I have told you all whenever I have discussed advanced cost sheet. I'll tell you that problem in advance. As per me, okay, correct format of cost sheet, you know, sale of scrap as per your ICAI, from cost sheet, it gets reduced before cost of production. Okay. As per me, it should always be reduced before your gross factory cost. By simple reason it is. In this case, think like this. When does scrap get reduced? Whenever you all are going to be doing production activities. So therefore, all the expenses till production, it should be reduced from there only. That is why even in process costing, all your normal loss are put in process account, not in your finished goods account. Okay. Now, I think so. Somebody who made this question did not know what ICA is doing and he knew the correct thing. I think so. I've given 2 versions of this answer. One of them will be correct for sure. Okay, so let's do this. Question number 2A. The cost particulars of a concern of a cotton yarn manufactured by textile mill in April 26 are as follows. So this is the data for 1 month. 2 types of direct material. Cotton bales 2000 kg at the rate of 120 per kg. You can multiply. Other direct labor 600 kg at the rate of 85 per kg. Direct wages. Skilled men at the rate of 60 per day for 25 days. Unskilled men 30 per day for 25 days. Again, this is replica of almost your question number 3 of your cost sheet only. Okay. Direct expenses, higher charges, special equipment 9,000, power and fuel 3,000. Almost the items are also same only. Particulars, works overheads 160% of direct wages. Okay. Admin related with production 45,000. S&D 37,500. Selling price per kg of cotton yarn, that is 600. Okay. Additional information. 1500 kgs of cotton yarn was produced. Okay. Waste, I'm talking of this only, and chemical scrap realized in the manufacturing process amounts to 23,500. I have only a problem regarding this. There were no opening or closing stocks of raw material or finished goods. You are required to prepare a cost statement for April 2026 showing prime cost, net works cost, cost of production, cost of sales, and total profit and sales. Now, answer can differ based upon how you treat this thing, and only this answer will differ. Okay. First, I'll try to follow the format of the institute that ICAI has told in chapter number 6. Okay. So, 2 types of direct material, 2 types of direct labor, 2000 kg at the rate of 120, 600 kg at the rate of 85. 75 people working for 25 days at 60 per day, I guess. Okay. So, 1,12,500. I'll just check up whether these numbers are correct or not. 75 into 60 into 25. Yeah. 1,12,000. Yeah. Then unskilled workers 40 into 30 into 25. Then these two things are directly there with you, 9,000 and 3,000. Okay. Once you do that, I'll give you prime cost. Then works overheads 160% of direct wages. See, this is your direct wages. This is your direct wages. 112,500 plus 30,000. Okay, into 1.6. So therefore, this figure will be 2,28,000. This will give you works cost. Add admin related to production. Now see. Less sale of scrap, 23,500. This figure was over here. Okay. Once you all do that, this will give you cost of production. Then add S&D, that is 37,500. This figure is over here. Okay. Then after that, I'll give you cost of sales. Then profit is going to be your balancing figure. Sales is 1500 kgs at the rate of 600. So therefore 9 lakhs. You might not make a per unit column also. So therefore this will be your profit. Okay. So you have got all your answers over here. In and actually you should make a list that this is the prime cost, this is net works cost, and so on. What I thought and what I think ICAI will give as the answer. That is my thinking. Those guys have written net works cost. Originally, if you apply your common sense, you will understand. 23,500 is scrap realized during production. This should be reduced before you arrive at works cost. That is what we all do in process costing also. It is reduced from the total of the expenses on the debit side. That is DM, DL, DE and works overhead. That's what I told you while making advanced cost sheet also. Okay. So that will make actually no difference to your profit, but then it will make difference to your works cost. See, that is whatever I have done over here. Now those guys had asked me net works cost. So therefore I thought like this, that ICAI must have done something to call that thing as net works cost, and that thing can only be this. So therefore I started with prime cost. This is prime cost. No, I started over here with that because before that all the things will remain same only. At factory overheads that will remain same. Actually from here we should be reducing 23,500. You might not even write down this particular thing, that's okay. Okay. But 23,500 should actually be reduced before you arrive at net works cost. So therefore, I am not sure what answer of net works cost ICAI is going to be giving. It is going to be one of these two. Logically, it should always be this, but then ICAI has written wrong things itself in cost sheet, so therefore I cannot be helping it. Okay. Rest all the things will be same. In any case, the profit is going to be same only, that will not be changing. Okay. So basically only arrangement of the things here and there will be changing one of the two answers. Okay. So which one you all have done, you all can tell me. Okay, I say I might give both also correct only. I don't like. Chalo, let's Leave that thing for the institute to be deciding. Okay, easy question, but then this confusion is always there. Actually, it's there in the concepts of the module. Okay, this problem is there in the concepts only. They don't realize from where should the scrap be reduced. Okay, chal, all together done. Chale guys, we'll start away with question number 2B, my favorite chapter, always your marginal costing. I love that because it is pure common sense. Let's do that. PQR Limited is manufacturing company that operates at 80% capacity, generating a profit of 7,50,000 by selling 36,000 units. The cost details are as follows. Material cost per unit is 25. Labor cost per unit is 15. Semi-variable cost, variable is 10 per component. I'll do something right now only. 36,000 into 10. 3,60,000 is a variable part. So 8,20,000 minus 3,60,000. So 4,60,000 will be the fixed part of semi-variable cost. Okay, further. Contribution per unit is 50 rupees. Remember this. So one thing I can tell you right now also. Selling price is 25. Labor cost is, material cost is 25, labor cost is 15. Semi-variable cost, the variable part is 10. 25 plus 15 plus 10 will make it 50 rupees. And 50 rupees is a contribution. So therefore, selling price must be 100 rupees. Selling price is variable cost plus contribution. No? Further, margin of safety at current level of sales, 15 lakh. This is given to you. It can be checked also, to be honest. Fixed cost up to 80% capacity, including depreciation of 1,90,000 is 5,90,000. So there is this fixed cost and there is this fixed cost, but this fixed cost includes depreciation of 1,90,000. Additional fixed cost beyond 80% will be 1,50,000. So if you ever operate beyond 80%, you incur this much amount of extra fixed cost. Break-even point in units at current capacity utilization. Okay, so let's talk of current. If I talk of current, at 80%, we are operating currently at 80. So this part will not be coming only because there's a fixed cost beyond 80%. So I just thought I'll start to be making an income statement first. So therefore, income statement is like this. Selling price. I told you all it is 100. It is actually your variable cost of 50 plus in this case your contribution of 50 rupees, less variable cost, DM, DL and variable overheads, 25, 15 and 10. This I have only made for your conceptual clarity. This will give you contribution per unit. Okay, contribution per unit is actually there with you of 50 rupees. This is 50, so therefore this is actually your balancing figure into number of units. Currently you are producing and selling 36,000 units. Okay, so please multiply, this will give you total contribution, less fixed cost. Now fixed cost, semi-variable part is 4,60,000 that I wrote over here, 4,60,000 plus in this case 5,90,000 is your fixed cost. I've broken it up into two parts. One part is depreciation, obviously non-cash. Other part must be cash fixed cost. Okay, so therefore up to 80% cash only, that will be 4 lakhs. Remaining is 1,90,000 rupees of depreciation. That is also a fixed cost here for you. So subtract this, that will give you profit. Now if you see in this case, no, you can get this particular profit 7,50,000. 7,50,000 is also there with you. So this income statement actually I have made it for time pass for you all. Okay, not for any other reason. Okay, everything is there with you. In fact, if you want, you can even ascertain this margin of safety 15 lakhs. I'll try to be checking this figure also for you all. Okay, so therefore this data is given too much actually. You can cross check each and everything. In any case, I'll check it up for you in just a while, but let me go ahead. You want to be finding out break-even point in units. How do you get your break-even point? It's fixed cost upon contribution per unit. Fixed cost is 10,50,000. Contribution per unit is 50. I've divided that over here. Break-even point in units is equal to fixed cost divided by contribution per unit. 10,50,000 upon 50, 21,000 units. Okay, first thing. Second thing. Total sales value and cash break-even sales at current capacity utilization. Total sales value 36,000 units, you are selling at 100. So therefore total sales value will be 36 lakhs. That is whatever I have written over here. Okay, first thing. Then you want to be finding out cash break-even sales. Now see, break even point is fixed cost upon contribution per unit. Cash break even point is cash fixed cost divided by contribution per unit. So therefore, cash break even point is equal to cash fixed cost divided by contribution per unit. Now think which are your cash fixed cost. Depreciation is not a cash fixed cost, ignore that. So this figure plus this figure, 8,60,000 divided by contribution per unit, 17,200. But I think those guys want cash break even point in rupees. So 17,200 into 100 rupees of selling price, 17,20,000. This should have been your next answer. Okay. So part 1 is done. Part 2 is done. Somebody says, sir, verify that margin of safety for me. Okay. Margin of safety is a sales beyond break-even sales, no? In case you want to verify, see, you were selling 36,000 units. Out of that, break-even point is 21,000. So 15,000 units is your margin of safety into 100. That will give you 15 lakh rupees of margin of safety. In case you want to verify that. Okay. Then, I like part 3rd in this question. I love that part 3rd. Capacity utilization and margin of safety sales if the company wants to earn a profit of 937,500. Assume selling price and variable cost per unit remain unchanged. So those guys are saying if you want a profit of 937,500, then what should be the capacity utilization and what will be the margin of safety sales. Now one thing you have to understand, if you keep on operating at 80%, over here we were operating at 80%, correct? We were operating at 80%. Now, if you operate at 80%, selling price remains this, variable cost remains this. If you operate at 80%, you will be selling 36,000 units only. This is the contribution that you will be getting. This is a maximum profit that you will be getting. You will not be able to earn more than 7.5 lakhs. But now, part 3 says you want to be earning much more than that. So, therefore, you need a higher capacity. So, you will be going beyond 80%. And the moment you go beyond 80%, can we say this fixed cost will also start to be applicable? No, in that case, this fixed cost will also apply. So now that is whatever I've written over here. It is actually not assumed, but it is impliedly assumed. Okay. Now see, in that case, listen to me. Same income statement I have made. Selling price is 100, variable cost is 50. They are saying also keep your selling price and variable cost per unit as same. Contribution per unit will be remaining this only. Okay. So this and this I have got. Okay. Now they want a profit of 937,500. Okay. That is whatever part 3 says. They want this much amount of profit. See over here. 937,500. Okay. Now fixed cost in this case up to 80% cash fixed cost 4 lakh. That was there before also. Depreciation 1 lakh 90. Then the fixed cost which was part of the semi-variable cost 4 lakh 60. And this is extra fixed cost will be coming because you are operating beyond 80%, 1 lakh 50. So therefore total of all these fixed costs is 12 lakhs. This plus this will give you this. Okay. This is the total contribution that you need. Total contribution divided by contribution per unit. So you got to be selling 42,750 units. You got to be selling 42,750 units. Okay. Now see, one other thing. Listen to me. 80% you were selling 36,000 units. So 100% please compute. I guess that will give you 45,000. So therefore your 100% capacity was 45,000 units. But now to get a profit of this much, you will need to be selling 42,750 units. So 42,750 units divided by 45,000. So therefore into 100 you all can do. So therefore you will be working at 95% capacity. You will be working at 95% capacity. Okay. Correct? Further. Now see, break even point you have to be finding because you have to find out margin of safety. Okay. So therefore break even point is fixed cost divided by contribution per unit. 12 lakh divided by 50, 24,000 units. You're going to be selling 42,750 units, no? 42,750 minus 24,000, that will give you margin of safety. Multiply it by 100, that will give you margin of safety sales. So therefore, that should be 18,75,000. Okay. I think with that, all your answers required are altogether done. Capacity utilization will be 95%. Margin of safety sales will be 18,75,000. Okay. That's it. This thing is altogether done. So how many marks are you going to be getting in this? It was a 7 marks question here. I think so. It should be 2 marks over here, 2 marks over here, and might be 3 marks over here. That's what I try to be thinking. You can try to evaluate how many marks you're going to be getting. Okay, chalo, question is altogether done. Chale guys, we'll start away with question number 3. This was on joint products and byproducts. Not a tough question, but not too easy also. You have to be thinking few things. Let's do this. This is all about apportionment of joint cost, and also over here there will be fund of depth of processing, whether you should do further process or not. Let's do this. Apex Chemicals processes a basic chemical raw material in department 1. Okay. Which yields two joint products A and B at the split off point in the ratio of 60-40. The input-output ratio of department 1 is 100:90. So if you put 100 units, you're going to be getting 90 units. And 90 units that you're going to be getting will be in what ratio? It will be in the ratio of 60:40. A and B will be coming out. Okay. So 90 gets divided in the ratio of 60-40. Okay. Again, I'll repeat. If input is 100, output is 90. And 90 is in form of two joint products. Out of that, 60% is A and 40% is B. Further, product A can either be sold at split off point or further processed in department 2 to produce A prime. Department 2 is exclusively used for product A and its input output ratio is 100:80. So if you put 100 units of A inside, okay, 80 units of A prime will come out. Please do remember that. So this ratio is 100:80 and department 2 is only used to convert product A into A prime. Okay. No other use of department 2 is there. Further, raw material 1,20,000 kgs. Now here only I can do many things for you. See, 1,20,000 kgs if you will input, there will be output to the extent of 90%. So 90% of this will be 1,08,000. Now 1,08,000 will come out in the form of A and B in the ratio of 60:40. So 1,08,000 into 60%, 64,800. Okay, and remaining will be 43,200. Now this 64,800 can either be disposed of over here. Okay, it is written can be sold at split off point, or it can be going in department 2. If it goes in department 2, then 100:80 is the ratio. So 64,800 into 80%. So 51,840 will be the output of A prime. Okay. And this thing will happen in department 2. Okay. Please do remember, raw material is only put in department 1. In department 2, there is no raw material. Actually, there will be nothing but product A, no? Okay. Further, conversion cost. Conversion cost always is a cost to convert material into finished goods. Okay. Other direct material, direct labor, variable overheads, fixed overheads. Actually, this total will be more than enough for us. That is 20 lakhs and 5,40,000. Nothing else will be needed. Okay, further. Other data. Other data, selling price of A at split off point 45. B is 45. A prime is 75. Selling expenses are 30,000, 26,000, 22,000. Please do remember, you only incur selling expenses if you sell, no? If you don't sell, then you'll not be incurring. Further. Required, prepare a joint cost apportionment statement for products A and B on the basis of sales value at split off point. Okay. Further, advise whether product A should be sold at split off point or processed into A prime, showing incremental revenue, incremental cost and profit. Okay. This is not that tough a question if you know the basics of joint products and byproducts. See, first statement says apportion the joint cost. Let's find out joint cost. Now, joint cost in this particular case, think first of all, it will be your raw material cost, 1,20,000 into 7, 8,40,000, plus all the conversion costs that are incurred in department 1. Okay, so therefore this will be your joint cost. So 8,40,000 plus 20 lakhs, 28,40,000 should be the joint cost. That is whatever I have written over here. That is calculation of joint cost. That is one thing. Now let's apportion this in the ratio of sales value of output. How to be getting that? Now, I got 1,08,000 for you, divided up in the ratio of 60-40. I got both these numbers for you. Now, how does sales value method work? You have products A and B. Output is 64,800, 43,200 that you all are aware. If you sell them at split off point, at what rate will you sell? 45. So, therefore, we multiply by 45. This will give you sales value at split off point and divide this joint cost over here, 28,40,000 in this particular ratio. So, therefore, this is a bifurcation. 17,04,000, 11,36,000. You should have got both these answers. Okay. So it is simple application of sales value method. Okay. Now think it of like this. See, this is important whatever I'm going to be doing now. Advise whether product A should be sold as split off point or processed into A prime, showing incremental revenue, incremental cost and profit. See, it's simple. You process any product further whenever its incremental revenue will be higher than incremental cost. That is the only thing. Try to find out incremental revenue. Incremental revenue will try to get under or by doing two steps. If you sell A prime, how much will you get? If you sell A prime, how much will you get? If you sell A just like that only, how much will you get? Okay, the difference is extra revenue. Subtract extra cost over here. That's it. You will be able to arrive at the answer. That is exactly the calculation that I have done. See, if you sell A prime, you will be able to sell 51,840 units. At what rate? At the rate of 75. Okay, so therefore, you can multiply. I have done that calculation over here. 64,800 into 80%. That is 51,840 units at the rate of 75. Okay, it should be at the rate of 75. I must have done calculations correct only. Yeah. So this is into 75, not 45. It's a printing error. This figure is correct. Okay. But please do remember, whenever you will be selling, you will be incurring your selling expenses also. Selling expenses that you will be incurring for A prime will be nothing but 22,000. So therefore, this will give me how much you will get in hand. 38,66,000. Okay. Now this is if you sell A prime in the market. Okay. Now if you do not sell A prime, you will be selling A directly only. Okay. So see what I have done over here. See. 38,88,000 you're going to be getting if you sell A prime, but then this will be your selling expenses. Okay, that is 22,000. This is the figure that you will be getting in hand. But if you sell A just like that only, how much sales will you get? If you want to compute, you can compute it once more. That is 64,800 over here. This particular figure. 64,800 into 45. That will again give you 29,16,000 only. But if you sell A just like that, you will incur higher selling expenses of how much? 30,000. So therefore, that 30,000 I've written over here. So let's subtract that. So therefore, in hand, you're going to be getting 28,86,000. You take this, you subtract. Extra revenue that you will be getting is 9,80,000. But for that, you will have to take the product inside department 2. And in department 2, whenever you all take, you will incur this extra cost over here of 5,40,000. No? This is your extra cost of 5,40,000. So therefore, 9,80,000 is more than 5,40,000. You will make extra profit of 4,40,000. As there is extra profit, it is better to convert A into A prime. You will be getting marks in part 2 only based upon this answer. You might not even ask me also, sir, I did not take the S&D expenses up and so on. How many marks will get reduced? 0. Okay. You should be getting this particular thing over here. Okay. So advice, since incremental profit is positive, A should be processed into A prime. That's it about this entire question. Not very difficult if you know the fundas of joint products and byproducts. Okay, chale, this thing is done. Chale, question number 3B. This is on standard costing. Okay, but then this is a second question on standard costing in this entire paper. I always thought that why there should be, but when I looked at it, I realized that it is on fixed overheads. Okay, so therefore this is on standard costing, but not of material, not of labor, but fixed overheads. Okay, fixed overheads was the last thing that we all had done in standard costing. And we have exactly the same question in our book also. Exactly the same question. Let's do this. Alpha Limited uses standard costing system for manufacture of its single product. Okay. Star. The following details have been gathered from the cost records of the company to compute fixed overheads variances for a certain period. Number of budgeted working days, 25. Budgeted man hours per day, 12,000. Output per man hour in units, 1. Even in our question in the class, it was 1 only. Then fixed overheads cost as budgeted, 6 lakhs. Actual number of working days, 28. Actual man hours, 12,500. Actual output per man hour 0.9. Coincidentally, it was 0.9 in our books also. Actual fixed overheads incurred was 6,24,000. You are required to ascertain fixed overheads expenditure variance, volume variance, calendar variance, and fixed overheads cost variance. Okay. Now, I always calculate all these variances after putting the things in a standard format. That standard format is going to be like this: budget or standard, okay, and then actual. Fixed overheads are dependent upon period. In this question, period is not given, but then this standard and actual data must be of the same period. Okay, now see, number of working days. Now our format is always like this: days, hours worked, fixed overheads and output. So first of all, what should have happened? Okay, what should have happened? So therefore, try to see this. In this period, there should have been 25 working days. On every day, workers should have worked for 12,000 hours. So therefore, 12,000 into 25, 3 lakh hours. In any case, this 12,000 will also be appearing in form of absorption rate. Absorption rate 1 day is 12,000 hours. In case we'll need it, I have just written that. Okay. Then, output per man hour is 1. Output budgeted per man hour. So for 1 unit, 1 hour should be taken, or in 1 hour, 1 unit should come out. So therefore, 3 lakh hours are there. So output should have been 3 lakhs. Okay. So this data also we all have got. Fixed overheads in this case is 6 lakhs. Okay. These are all your standard informations or budgeted information. Now actual. Actual output is 28. Okay. Further. Actual man hours per day is 12,500. So what I'm saying, 12,500 into 28 will amount to 3,50,000. Okay. 3,50,000 is 12,500 into 28. Further. Actual fixed overheads are 6,24,000. Acha. And actual output per man hour, in 1 hour, they produce 0.9 units. So in reality, workers have worked for 3,50,000 hours. 3,50,000 hours into 0.9 will be giving you all 3,15,000. Okay. That's it. Now, once this thing is all together done, okay, now start to be calculating variances. There are 4 variances now. So first of all, expenditure variance. Expenditure variance is calculated how? In this period, how much should have been the expenditure, how much was the actual expenditure. So therefore, actual expenditure was higher by 24,000. So therefore, answer is 24,000 it was. Second, volume variance. They have asked you volume variance. How do you compute your volume variance? What should have been the output? Volume means output. What should have been the output? That is 3 lakhs over here. Okay. And what was the output? Yeah, this pen sometimes stops to respond only. Yeah. So what was the output? 3 lakhs. What should have been the output? To 3 lakhs. What was the actual output? 3,15,000. Okay. Into absorption rate per unit. So therefore 2. You have produced 15,000 more units. Do remember, if you produce more units, fixed overheads per unit will fall. Cost will fall, no, it will become favorable. Okay. Then, third one is calendar variance. Factory should have opened for 25 days. It opened for 28 days. It opened for 3 more days at the rate of rupees 24,000 per day, 72,000. But adverse or favorable, if factory opened for more days, workers came to the factory for more hours, they produce more units. If they produce more units, fixed overheads per unit will fall, no, variance will become favorable. And lastly, in this case, they have asked you total fixed overheads cost variance. That is nothing but absorbed amount minus actual amount. Absorbed amount is 3,15,000 over here. This particular figure, 3,15,000. Every unit is rupees 2 no over here. Okay. Sir, how did rupees 2 come? Beta, you find out all these absorption rates from the standard data, no? Okay. Example. This absorption rate we already had with us. Okay. Rupees upon units will give you absorption rate per unit. Rupees upon hours will give you absorption rate per hour. 1 unit is 1 hour, that is known to us. In case you want to be computing, you can be. That is 3 lakh hours divided by 3 lakh units. And lastly, 1 day is how many rupees? It will be rupees upon days, no? Rupees 6 lakhs divided by 25,000. So it was 24,000. Okay. 6 lakhs divided by 25 will be giving you all 24,000. I think I spoke something wrong. So therefore, I just repeated that. Okay. Now, once you all do this, so I was on total fixed overheads cost variance. Total fixed overheads cost variance in this case is absorbed amount 3,15,000 into rupees 2. So therefore, absorbed amount was 6,30,000. Okay. minus actual amount 6,24,000. 6,24,000. This will give me 6,000. Your actual cost is less. So therefore, in this case, it is favorable. So therefore, I guess 4 things, 4 marks. 24,000 it was, 30,000 favorable, 72,000 favorable, 6,000 favorable. Let me know how many marks you got in this question. This question is over. Chale guys, we'll start away with question number 4A. This was on budgetary control. Now again, I'm saying that thing at the beginning of each and every question. This is almost lookalike of the question that we had done. You have been given sales budget for a certain period. Okay, sorry, you have been given sales for a certain period. And then in the next period, there are some changes in the quantity, some changes in the selling price. Based upon those changes, you try to make the budget for the next period. And also for current period, those guys have given you the budget as well as actual. Okay, so you have to make a performance report or something like that. Okay, so let's start to be doing it. Z Limited manufactures 2 categories of products, Omega and Theta. Okay, these products are sold through 2 primary distribution channels, online and retail stores. So therefore, we sell in the online market and through the retail stores. In the current financial year, Omega performed exceptionally well online due to viral trend. Okay, while Theta saw a surge in the retail stores. So Omega performed very good online. Omega was very good online. I will highlight it by this way. And Theta saw a surge in the retail stores. Okay, further. The following information is available for the year 2025-26. Omega, Theta, online retail, budgeted sales, okay, of the 4, actual sales. See, if budgeted and actual sales both are given, that means this year is over, no? Because actuals will come to know at the end of the year. Selling price per unit for budgeted and actual sales, that is this. So this year is over. We had budgeted this, we got this particular thing. You all can see Omega did very good online. Okay, and Theta did very good in retail. That is whatever those guys had told also. Okay, and this is the selling price for budgeted and actual sales. Further, market research indicates that Omega is facing stiff competition offline. Okay, therefore management has decided to reduce, this is for Omega, okay, reduce the selling price by 10% across both the channels. So therefore, in the next year, these prices will be reduced by 10%. So therefore, this will become 13,500 and this will become 16,200. Will reduce the prices by 10%. Theta series has gained luxury status. So the management has decided to increase by 5,000 rupees for both online and retail stores. Okay. So therefore, this will become 45,000 and this will become 50,000. Further, based on these price changes, sales manager has submitted the following estimate of increase in sales for 2026-27 based upon original budgeted sales. So therefore, these changes are to be applied to budgeted sales. Budgeted is this particular data. Okay, I have done it bold. In exams, it will not be bold. Okay, I have done it myself, so therefore I can put your attention to it. Okay, Omega online will increase by 15%. So therefore, this was the budgeted. No, this will increase by 15% first. Omega retail will increase by 5%. Okay. Theta online will increase by 10%. Okay. And Theta retail will be increasing by 20%. Okay. Furthermore, the company has signed a contract for influencer market campaign. It is estimated that for 2026-27. This is the next year, please. Okay. Please do remember this data that was given to you was for 2025-26. This is the data. These are the budgets for 26-27. So, those guys are saying that in Omega will generate the following additional sales. So, after this is done, this will be extra sales. Over here, 200 more. So, after doing 15%, add 200 more. Then over here, nil. Theta online increase it by 100. And over here increase it by 50 units. Okay, so I guess quite clear. I've incorporated all the things right over here only. You are required to prepare sales budget for 2026-27 after incorporating the above estimates. Statement showing budgeted and actual sales for 2025-26. Okay, this part is very easy. This part is more easy in fact. Okay, listen. So first of all, you got to be making the budget for 2026-27. So try to have all the new things. So first of all, selling prices, see I already got over here. Okay, that I have simply just written over here. Original changes, new ones. Okay. Now quantity. So quantity, I told you all over here. This and this will increase by this percent, this percent, this percent, this percent. So therefore that part I have done over here. Okay. So after that increase, these are the new figures, and then increase it by these numbers that I wrote over here also for you all. Okay. So therefore I increased it by this much. So therefore this is a final estimated sales in units. These are the units, these are the selling prices, multiply. So therefore I took these four numbers, put them over here. I took the above selling prices of the last column, okay, in table number 1, and I multiplied. This should be your total sales budget. You should have got this particular answer. If you want to do the presentation slightly better, okay, slightly better, you can total of these two, you can total of these two, and then you can have the final total to arrive at this figure. Okay, this part is part number 1 all over. Okay, now part number 2. For part number 2, I do not require this data. Okay, because in part number 2, those guys have told that make a table and give a comparison of budgeted and actual sales for 2025-26. Okay, so budgeted sales will be this into this. Actual sales will be this into this. Make a statement to try to compare. That is whatever I have done over here. See, budgeted units, selling price. Multiply, you will arrive at budgeted sales. Actual units, the selling price, multiply to arrive at this. This will be budgeted sales, this will be the actual sales. Okay. Easy question, just you have to follow the instructions. Okay. Please, everybody can try to say, sir, we got full marks in this. Okay. Chali. So this question is done. Chali. So question number 4B, this is employee costing. We have same question of labor turnover in our books. Exactly the same question. Numbers of course are different, okay, but exactly the pattern is same. You all have 3 methods to calculate your labor turnover. That is your separation method, replacement method, and flux method. In flux method, we have 2 versions. Old flux method, new flux method, okay, and there is a method to find out that company follows what. Again, the same hint that was there in our class textbook is over here also. The labor turnover rates for the quarter ended 31st of March 2026 are calculated as below. You have 12%, 6% and 4% under flux method, replacement method and separation method respectively. Okay. The number of workers replaced during the period is 54. Okay. Please do remember, as this plus this, as this plus this is not equal to this, that means the company must be following new flux method, whereby they take number of accessions. Okay, I will try not to bring that thing into picture, so therefore there is no problem. You are required to find out the number of workers separated during the year. This you will get by using separation method answer. Number of workers recruited and joined including replacements. This you will get by using flux method answer. Recruited and joined, which are actually called as number of accessions also. Average number of workers on the roll during the quarter. Okay, see, first of all, we will be able to get this answer. Sir, how we will be able to get this answer? Because you have some other answer with you. You already have number of workers replaced, and then you have the answer under the replacement method. Can we be using that? So therefore, see, under replacement method, labor turnover is calculated as number of workers replaced during the period, excluding the workers joining on an expansion program, divided by average number of workers into 100. So therefore, this figure was nothing but 6%. You can call that thing as 6 also. That's okay. Okay. 6 is equal to 54. That is number of workers replaced. Okay. That thing is given to you over here. Divided by average number of workers into 100. Once you all bring 6 over here, 54 upon 6 into 100. So therefore, average number of workers will be nothing but 900 workers. So therefore, this answer is 900. Okay. This is first thing. Second thing. Now, you can do anything, but better we use separation method first. Why? Because under separation method, there will be only one missing figure. If you follow flux method, there will be 2 missing figures. Okay. So therefore, under separation method, how is labor turnover calculated under separation method? Labor turnover is number of workers separated during the year divided by average number of workers into 100. So therefore 4%, you should call this as 4 only because we have done into 100 over here. Okay. is equal to number of workers separated during the period divided by average number of workers in the period into 100. Now think, this figure is 4. Okay, number of workers separated during the period. Okay, in this case will be your balancing figure. Okay, divided by average number of workers that you all have got over here as 900 into 100. The moment you all do that, I'll give you number of workers separated. So therefore 900 into this, these two zeros and these two zeros will get cancelled. 9 into 4, this will give you 36. Okay, so therefore 36 workers were separated during the year. Okay, separated also means left and discharge. I've just written like that for your reference. Okay, chalo. This was your this answer. So therefore this answer was 36. Just a sec. This answer was 900. This answer was 36. Now there's only one data that is left in the question, is flux method. Flux method, we calculate labor turnover. How beta? Is number of workers separated. That is nothing but 36 no over here. Okay, so 36 plus replaced during the period. But please do remember, this is new flux method. So therefore including the number of workers joining on an expansion program divided by average number of workers into 100. This is how you try to be computing the things. Okay, so therefore 12, you call this particular thing as 12 only. Okay, is equal to 36 plus this entire bracket. See, this thing was 36, no? So therefore this entire bracket I have simply written the word replaced, divided by 900 into 100. Some errors I have done over here, I think. Okay, but I think answer should be correct. Let me just try to be seeing it. So therefore 9 into 12, that is 108 minus 36. So 72 workers. Okay, this answer is altogether correct. Okay, so therefore your final answer over here should be 72 workers. Okay, you can let me know whenever you saw this question, did you recall the questions that we have done in class or not? Yeah, I will really tell you, okay, one honest confession. I do everything that can ever come in costing. Yes, it takes more amount of time and I do pure logical stuff. All my students are aware of that. So in case you want to be learning once and forever, then you should try to join the class. If you want to mug up, if you just want some short-term course and try to be passing, then there are many professors in India. You can please keep on joining them. If you want somebody to tell you these are the rankers that we got, these are the marks that my students have got, a student doesn't get marks because of the professors. They get the marks because those guys bloody study. Okay, so it is okay. Now from last 4 or 5 years, I have stopped to say also how many people get ranks, how many people got this, few things here and there. Sometimes I try to share, but that is very less. So ultimately you all have akkal no with you. Try to be deciding where you should be joining. Okay, chali. And all my lectures are free on YouTube. Okay, so in any case you all should try to avail of that. Yeah. No marketing. This question is over. Question number 5A, activity based costing. I have always told you it is a sure shot question that always comes. So therefore there is something like, that you all should be well aware. Activity based costing. Now this question, some people could have got it wrong only because of this data. Number of units produced and number of units sold. They might have thought there is closing stock up and so on. Okay. All those things you can be thinking in and try to match your answer. In case you have thought like this, then you'll have to be making provision for closing stock also. Okay. This is just an advance for those people who have already given the paper. Okay. So in any case, I will do that in slightly a way whereby my stocks are not required, but in an answer is same. Just one thing, please do remember, you get profit by selling the goods, not by producing the goods. So therefore, profit is always sales minus cost of sales beta. Let's do the things. XYZ Private Limited manufactures 2 products, Mini and Maxi, using the same production methods. The company operates under absorption costing. The details for the financial year 25-26 are given below. Number of units produced 8,000, 10,000. Okay. Number of units sold 6,400 and 8,000. Okay. I will put one line over here for my reference. Direct material cost per unit, direct labor per unit. Okay. 4 hours, direct labor hours per unit, 4 hours and 5 hours. Selling price per unit sold during the year 950 and 1180. Using the Traditional method means absorption costing. All production overheads were 54 lakhs, which were directly distributed on the basis of units produced. Production overheads means factory overheads. That was 54 lakhs. That was distributed based upon units produced. Units produced means output method, no? Okay. So therefore, units produced, this figure plus this particular figure will make it 18,000. Okay. So 54 lakhs was absorbed based upon 18,000 units. Okay, 54 lakhs was absorbed based upon 18,000 units. Let's do this upon this on your calci. I guess that will work out to 300 per unit. So therefore, factory overheads per unit based upon output method was 300 per unit. Okay. Acha, direct labor rate is rupees 50 per hour. Okay. So direct labor rate per hour is 50. So mini takes 4 hours to get produced, no? Workers are paid at 50 per hour. So 200 rupees will be direct labor cost over here. 5 hours at the rate of 50, it will be 250 rupees per hour over here. Okay. Further, the board of directors is considering transitioning into activity-based costing system to determine production overhead. So now they are shifting to activity-based costing. Okay. The total production overheads are analyzed into the following. Setup cost 9 lakhs, machine running cost 18 lakhs, and inspection cost 27 lakhs. Fine. The following data of cost drivers was provided by the production manager relating to the bifurcation of production overheads. Number of setups 100 plus 200, 300. So setup cost will be dependent upon setups. Number of machine runs 750 plus 1080. So 1800 runs. I guess machine cost will be dependent upon that. Inspection cost will be dependent upon number of inspections. So I guess total is 270 inspections. Okay. Now if you divide this data with this particular data, that will give you your cost driver rate. No, I'm just computing for time pass. Okay. Later on, of course, it will be needed by us only. Divided by 300. So therefore, cost driver rate in this case will be rupees 3,000 per setup. Over here 18 lakhs divided by 1800. So therefore this will be rupees 1000 per run, and 27 lakhs divided by 270. So therefore this will be rupees 10,000 per inspection. Now these things I can try to bring over here. It is rupees 3,000 per setup. It is rupees 1,000 per run. It is rupees 10,000 per inspection. So I guess 3,000 per setup. There were 100 setups for this, so you all can multiply. So therefore this figure will work out to 3 lakhs. This figure will work out to 6 lakhs. So therefore this is the bifurcation of 9 lakh rupees. Over here 7.5 lakhs, 10.5 lakhs. Over here 6 lakhs, and over here 21 lakhs. That is cost driver rate into whatever are the number of setups, number of runs, and number of inspections. You are required to calculate total sales and total profit. Okay. For each product under absorption costing, same question but under activity based costing. Now see, you want total sales and total profit, no? That is more important. Okay. Now I have done one way, but even if you do by the other way that I will be saying, that I might not have printed in the answer, final answer should be same, please. That is important. See, what did I think? Let me find out cost per unit under absorption costing. Cost will include what beta? Okay. 250 rupees of material. Okay. 200 rupees of labor cost. And under absorption costing, factory overheads was 300 per unit. So therefore 400, 250 and again 300 per unit. So therefore see what I have done. Direct materials, direct labor, production overheads. This will give you total cost per unit. Okay. Now I have directly multiplied by quantity sold. Once you multiply this particular thing directly, okay, you will arrive at, just a sec, 750 into 6,400. That will give you this particular answer, cost of sales. Okay. This sales I have just written like that only. Okay. So just a sec for your reference. 750 rupees and 950 rupees is the cost per unit. Okay, is the cost per unit multiplied by directly quantity sold. Sir, why quantity sold? But these are incurred for quantity produced. If you multiply by quantity produced, that will give you cost of production. Then from there you'll have to subtract the closing stock. Ultimately you will arrive at same answer only. This into this will directly give you cost of goods sold or cost of sale. That'll give you 48 lakhs. Okay. Now, I'll demonstrate that thing also for anybody who has slightest of the confusions. If you ever try to be thinking, no, sir, I have taken units produced, you get me the answer from there. Okay, I'll get you the answer from there. Listen, if you want to be doing the things in that manner, then in that case, what I suggest is, see, what I have done over here. In case you want to be talking of stocks and quantity produced, I'm telling you, see, 750 rupees is a cost. That figure you all can compute over here. This will give you factory cost per unit, correct? If you say, sir, I'll multiply by quantity produced, I do not have a problem. Let's multiply by quantity produced. Quantity produced was how much? 8,000. So therefore, we'll multiply by 8,000. So 750 into 8,000. This will be giving you all 60 lakhs, I guess. Just a sec. Yeah, this will be giving you all 60 lakhs. But please do remember, this will give you factory cost. This will give you factory cost. Can you say this is a factory cost for producing? This is a factory cost for producing. How many units, beta? 8,000. But you have sold how much? 6,400, and closing stock should always be accounted for then. Okay. So therefore, in this case, no, I will have to be writing less closing stock of finished goods. Okay. Can we say closing stock will be 1,600 units? Okay, that I guess we all are aware. Closing stock will be 8,000 minus 6,400, and it will get valued at 750 only, no? So therefore, pick up your calci, 1,600 into 750. So therefore, this will be giving you 12 lakhs. The moment you all will subtract, you all will understand. This will give you 48 lakhs. This will be your COGS as well as cost of sales. Add profit, get sales. That is, I directly got this without doing this, because ultimately I realize that profit you get because of quantity sold only. So therefore, I directly multiplied 750 into quantity sold. Directly I got this particular figure. Okay. So therefore, see, again I'll repeat it once and then I'll start off the things back. See, direct material, direct labor, factory overheads. Direct material was there in the question. Direct labor, we have the hours per unit, we multiply by the wage rate. Okay, factory overheads 54 lakhs was divided based upon quantity produced. Quantity produced in this case was 300 units. Sorry, it was not 300 units, it was 18,000 units. It comes to 300 per unit. Okay, so therefore, this will give you factory overheads or production overheads per unit. Okay, this will give you total cost per unit. Ultimately, we want sales and profit. Profit you get because of quantity sold. Either you multiply by quantity produced and then adjust for stock, or you directly multiply by quantity sold. I directly multiplied this particular figure over here to arrive at this data. Okay, I think I have messed up this line and this line. I should have written this up over here and this down. It's okay. I have explained you all now. That's fine. In the suggested, I'll change it. Okay. So therefore, this will be your cost of goods sold. Okay. This will also be your cost of sales also, to be honest. Once you all have done this, then in that case, simple. Try to find out sales. Sales will be quantity sold into selling price. That is whatever I have done over here. Quantity sold into selling price, quantity sold into selling price. 60 lakh 80,000, 94 lakh 40,000. Once you all subtract, this will be the profit as per absorption costing. Okay, your job as per absorption costing is completely done. You wanted to find out two things: total sales and total profit. This is your sales, this is your profit, this is your answer. Okay, fine. This figure is altogether done. Now the same thing under activity based costing. Now under activity based costing, what I have done first, there are three activities in this question. This and this. These are your costs. These are your cost drivers, which I have taken over here. I divided to arrive at cost driver rate. Cost driver rate I have multiplied by these particular things, and I have got this bifurcation. The same bifurcation I have done over here. See. Okay, it is exactly the same thing that I have done. 3 lakhs, 6 lakhs, 7.5 lakh, 10 lakh, 50, 6 lakhs and 21 lakhs. You total it up, divide by the number of units produced. Please do remember all these overheads are factory overheads, beta. Factory overheads are dependent upon quantity produced. So 206.25 and 375. Okay. And now again I have made exactly the same table that I made over here. No changes. But instead of factory overheads per unit of this, now we have got factory overheads, this that we wrote over here. Okay, 206.25. Okay. And 375. Accordingly, this data will change. Multiplied by quantity sold. Once you multiply it by quantity sold, you will arrive at cost of sales over here. Okay. Sales in any case will be remaining same only. So therefore, this will be your profit. So therefore, profit under activity based costing is going to be 18,80,000 and 12,40,000. Okay. This question was supposed to be a 10 marks question. As per me, there should be 4 marks for this part. And there should be 6 marks for this particular part. You all can tell me how many marks you all have got over here. Okay. That's it. If you have some comments, if you have some doubts, okay, sir, how did you get this? Please put in the comments below. I'll be answering those doubts. Okay. Chale, this question is done. Chale guys, question number 5B, question on CVP analysis. Okay one, you just have to be like, something has to strike your mind for this question to happen. Listen. Following information has been furnished by the management accountant of CMC Limited. Particulars. Margin of safety is 5,600 units. Break-even sales is 2,400 units. So I guess sales in units will be total of this 8,000 units. Sales is divided into 2 parts. One is break-even point. The remaining part is margin of safety. Acha, margin of safety in rupees is 9,80,000. Okay. So one common sense thing, 9,80,000 is margin of safety in rupees, 5,600 in units. If you will be dividing, you will get your selling price now beta. 9,80,000 divided by 5,600. So selling price is equal to rupees 175. That I have written over here also. Total cost is given to you. You are required to calculate profit. Okay. Profit should be total sales minus total cost. Total sales will be this into this, 14 lakhs minus total cost 11,94,200. So therefore 205,800 adverse. Sorry, no adverse. This is not standard costing. Okay, so this should be your profit. I must have written this answer somewhere below over here. Profit, total sales minus total cost 205,800. This was one of the answers. Okay, further. Profit volume ratio. Now, profit volume ratio, you can get PV ratio by how many methods? First, contribution upon sales into 100. I have sales, I don't have contribution. Forget it. Fixed cost divided by break even sales. Okay, I don't have fixed cost. Forget it. Profit divided by margin of safety, correct. So profit 205,800 divided by margin of safety 9,80,000 into 100. This is how you all can be getting the answer, correct? 205,800 divided by 9,80,000 percentage. So therefore it will be 21%. Further, break even sales. You already have break even point with your 2,400 multiplied by selling price. I don't know which Ullu made this entire question. Too simple here. So 4,20,000. I'll just check up below also. 21%, 4,20,000. Further, fixed cost. Can I say break even sales into PV ratio gives you fixed cost, no? So into 21%. 88,200. 88,200. I guess this was of 4 marks. 1 mark for each. You all can tell me how many marks you all got. Okay. Last thing I'll just say once more. Fixed cost is nothing but break even sales into PV ratio. That is what I did. I had both those informations. You will get the answer. Okay. Chal. Altogether done. This question is over. Last part, question number 6A. 6B, 6C up and so on, all these. Now this is pure theory stuff. I would not like to be discussing that. All these things are there in the book. In fact, for some of them, we all have made the videos also, like distinguish between cost control, cost reduction. There will be videos also, especially on this only. So you all can go through that thing. In any case, I printed the answer over here. Okay, that's it about this entire paper. Chali guys, here I rest my entire video. I have given you all the final answers. I have solved each and every question, okay, everything in detail. In case you want the PDF, then ask it on our Telegram ID @AgeNext. Okay, this is my Telegram ID. Put over there your name, your phone number, and the time that you'll be giving your CA Inter in, and we will give you the link for this entire PDF. Okay. These are the QR codes of all our batches. Okay, one of them is there in English and Hindi mix, one of them is there in English. In case you want the free lectures, okay, of my previous batch, then those you'll be able to get over here. All the lectures which are there on YouTube are also there on my website. It is slightly better that you watch them on website because all the resources come over there and you all can monitor your progress also without any ads or something. Okay. So I'll see you all next time. Just one small thing. Everything that we do is because I like teaching and I do it for hobby. Okay, that is why I put all my lectures on YouTube. My aim is not to be earning money. I'm doing something else. This is only a small part of me that is still hooked to the teaching profession, and that's why I'm doing this. Okay, and there is absolutely no marketing that we try to be doing. And as I've told ample number of times, we only teach by logic, and that is why, like, you know, for me to be solving the questions and for our student to solve the question is far simpler. You will find that most of the students who have been taught by me in past, those guys cherish costing and even FM of inter and final for the rest of their lives. That is because their thinking opened up in a far better manner as it could have if they would have joined somewhere else. It is pure logical teaching without a single formula ever that we all do in costing and FM. Okay. FM is still paid. I do understand that. I'll try to make it free at some particular time. Okay. Costing, in any case, I have done it. Okay. And all the things are free, okay, whether it is the tests also or it is a soft copy of the book, everything we are trying to be doing. I put a lot of case studies and MCQs also on website, okay, sorry, on the YouTube channel. Try to access that. Okay, that's it. Enough of Gyanbazi. I'll see you all next time in the RTPs or in the examination papers. All the best. Love you all. Bye. Take care.